Anyway, Rick Santelli staying by at the CME. Rick, the NASDAQ was down, Dow was down. See, this stuff comes out, now everything's up. What happened?
Well, you know, the inflation data, the most sought-after data, probably at this point in time. So every market's going to make an adjustment. I'm not sure that there's direct correlation with what you're speaking of. But, you know, 1.9 trillion, how much of that is built in? It's probably going to pass. I enjoyed Mr. Poitman today. Let's go through the data, shall we? Up 0.4 on headline, pretty much as expected. Follows up 0.3. Joe, June and July were up 0.5. You'd have to go all the way to 2012 to find a number higher at 0.6. If we look at ex-food and energy, it drops down to 0.1. And the year-over-year, 1.7. Strip out food and energy, 1.3. These numbers are rather tame. That's why you see interest rates on the 10s at 1.54. And if you look at real weekly earnings, real average earnings year over year for February, they moved from 4.1, but they were at 5.7, sequentially lower. And if you look at year over year on the hourly side, 3.4, which actually is a bit lower than 3.9, but both have suffered a bit. Listen, we could summarize inflation in the following fashion. Whether it's coming or whether it isn't coming, the real issue is, will it be reflected in rates? And I doubt that Jay Powell and company have gone through what they've gone through to not ramp up QE should interest rates reflect the true risk-reward profile. Back to you.
So you're looking at the NASDAQ chart, Rick. You don't think that had anything to do with what happened at 8:30? Really?
Oh, no, Joe, I haven't seen the live. I haven't seen the live NASDAQ chart in the last few minutes. I'm sorry. I was waiting at 8:30 to come on and talk to you.
Maybe people are holding their breath after a couple of those PPI. I said PP, but I think that it's not a huge move.
Atlanta GDP now is 8.35. They shouldn't hold their breath for long. Okay?
No, I know.
If you believe the dynamics of the correction in NASDAQ are real, they're only going to get more real because it was so unreal about 4 months ago.
Right. All right. Thanks, Rick. Steve Leisman joins us now.
Thank you.
Steve Leisman, I wish we had more time, Steve. I was going to talk to you about the dead, but we don't have time. Anyway, maybe at the end.
Okay. Just real quick, Joe. I think you are seeing some reaction in the market, a bit of a sigh of relief. Concern about inflation numbers inflation is definitely out there. You had some rise in meat and poultry, fruit and vegetables. Those were some of the big increases, along with energy up 3.9%. Going forward, I don't think that the energy rise is going to be quite as high. You had a big bump in February, not so much so far in March. The other thing, airline fares falling 5.1%. I think that'll turn around. But look, this is the last good one we're going to get. Or let me put it better. The last easy one we're going to get. Ian Shepardson writing ahead of this number from Pantheon Microeconomics. He says, core CPI inflation is set to rise sharply over the next 3 months as the initial COVID hit drops out of the calculation. So those good numbers drop out over the 12 months period, and we're going to have to get back to more realistic numbers here. I think the market knows that, and I think they like the idea that we'll be starting this March higher from a somewhat lower base, given the tame numbers today, Joe.
Shepard Smith here. Thanks for watching CNBC on YouTube.